Hey folks, welcome back to the channel. This is Jason, host of Fighting Words Financial, and today I wanted to talk to you folks about SoFi. The recent news has pushed things down to new lows, and I just wanted to talk about that for a moment. Now, I've made no secret of the fact that I own quite a few shares of this company, close to 7,000 at this point. And I have to admit, the ride has been pretty bumpy. My average acquisition cost is around $16 per share, which means that at this point, I'm pretty deep in the hole along with the rest of you guys. Although, let me just start off by bottom lining it here. My long term opinion of this company really hasn't changed all that much despite the negative news that's come out recently, and I'm going to talk about that, okay? So, the news that recently drove SoFi down to those fresh new lows had to do with the Biden administration extending the student loan repayment moratorium. To say that I was stunned doesn't cover it. Oh, I wasn't stunned by the news that the Biden administration was going to extend this program that's almost 2 years old at this point, that millions of potential voters benefit from during a midterm cycle. No, that doesn't surprise me at the least. I mean, political pandering never should. What surprised me was the reaction to the news. SoFi Technologies had to cut their 2022 financial targets by roughly $30 million per quarter due to that extension. That's disappointing, but not surprising. Me and many other folks who follow this stock pretty much assumed that this was going to happen, though. The move by the Biden administration wasn't shocking at all, and it doesn't change my opinion on how SoFi is going to perform in the future. SoFi is a growth story, and the evidence about this is quite clear. At current prices, right around $8 a share, this stock is a bargain. At least it is now. I certainly paid too much for my shares, but SoFi is trading at just 16 times its 2023 earnings targets while revenues are growing at 45%. That is growing at an annual rate of 45% without a ton of origination in terms of new student loan financing, which is what they are known for. SoFi Technologies reported Q4 2021 figures as well as full year numbers on March 1st of this year, 2022. They gave us anticipated 2022 numbers based on the current moratorium ending on May 1st of 2022. SoFi really expected the first quarter of 2022 to have about $30 million more in terms of revenues, but this didn't happen, of course, because of the delay in restarting those loan payments. So what does this mean for the loans that SoFi currently has on their books? Can people just stop paying since there's a moratorium on federal student loans? They have billions of dollars of loans on their balance sheets. No, folks, that's not what that means at all. To understand SoFi's business, you have to understand a little bit about the student loan industry and what student debt looks like in America. SoFi refinances high interest private and federal loans into consolidated private loans, generally for the convenience and for better terms for the borrower. SoFi doesn't have any so-called federal loans on their books, other than the ones they might service through contracts, and the loans they do hold are not covered by repayment moratoriums. Not covered at all because these are now private refinanced loans. The U.S. Department of Education actually owns the vast majority of student debt. 92% of the $1.6 trillion in outstanding student loans for more than 43.4 million borrowers is actually owned by the U.S. Department of Education. Very little of the overall debt is actually owed to private lenders like SoFi Technology. This is a massive economic and political issue here in the United States. And just to give you an idea of how large an issue student debt is, about 1 out of 7 people in the United States carries a student loan. The average bachelor's degree holder with student debt owes about $29,000. The average grad student owes about $71,000, law student $145,000, MBA student $66,000, and medical student debt averages around $200,000. A nursing student may owe anywhere from $20,000 to $50,000 depending on the alphabet soup behind the name once they graduate. So you can see the scale of this issue is actually pretty massive. So back to what caused SoFi to fall at this time. SoFi initially guided 2022 revenues to roughly 1.57 billion based on student loan origination volumes normalizing to pre-COVID levels by about mid-May. So what does that mean? That means that they were expecting to start a wave of student loan financing once that moratorium expired. Now, this isn't going to happen in May. And it isn't going to happen at least until August, when the moratorium is supposedly going to expire again. But SoFi has gone ahead and thrown in the towel on 2022 when it comes to the moratorium. They're just assuming that it's going to continue, and they reduced full year guidance by about $100 million to around $1.47 billion. Even when you take that $100 million out, their revenues are still at $1.47 billion. That is still a company growing revenues by 45% a year. What? How are they able to do that? Well, SoFi at this point is a lot more than just a student loan refinancing company. They have a lot more going on than just those student loans, even though that's what they are most known for. SoFi has been rapidly diversifying its operations and revenue sources for a few years now, and a lot of people don't realize that. Its member base is growing extremely rapidly, and its product offering is getting broader and more sophisticated. The acquisition of Galileo Technologies a couple of years ago created technology platform revenues, new opportunities for revenue as well. New financial services have grown to be a large part of overall revenues at this point. A new bank charter and the acquisition of a regional bank is going to create new revenue streams and streamlining opportunities for the company where they can save money. And with the acquisition of the Technisys banking platform, we're probably going to see significant expansion into banking in Latin America over the next couple of years. Student loan operations in the past provided SoFi with almost 84% of their total revenues. That share has been shrinking for a while now as other revenue sources have simply been growing faster. What we are looking at is significant growth in financial services revenue, technology platform revenue, and that is outpacing growth in the lending operations of SoFi. Additionally, current revenue estimates don't even fully include the likelihood of vastly increased bank deposit operations in a rising interest rate environment due to SoFi's bank charter being finally approved. So let's take a look at just how much of a growth story SoFi is right now. You can judge for yourself whether or not you think the market is severely undervaluing the long-term potential of this stock. This is going to be from the fourth quarter and full year 2021 results. Here we see that total GAAP net revenue of roughly $286 million in the fourth quarter of 2021 and roughly $985 million for full year 2021 increased 67% and 74% respectively from the corresponding prior year periods of $171.5 million and $565.5 million respectively. On an adjusted basis, net revenue of $279.9 million for the fourth quarter and $100.01 billion for the full year were up 54% and 63% respectively from the corresponding prior year periods, totals being $182 million and $621.2 million respectively. Strength in all three of SoFi's business segments, that is lending, technology offerings, financial services, drove the year-over-year growth in these measures. SoFi did record a GAAP net loss of $111 million for fourth quarter of 2021 and $4.83 million for full year 2021 versus the prior year period's net loss of $82.6 million and $22.4 million. We do see losses increase year over year here, but that is to be expected with a growth company in acquisition mode, both in terms of new members and actually business partners like Galileo Technologies and Technisys. So yeah, let's talk about member growth. SoFi added a record number of both members and products in absolute terms for the quarter and for the full year. If you watched the Super Bowl, you may have noticed that it was played in SoFi Stadium. A huge brand recognition push was made last year with some very successfully integrated marketing and influencer campaigns. This really took SoFi's brand awareness to a new level, and SoFi capitalized on this with better execution of what it calls its financial services productivity loop, which is very similar to Amazon's flywheel strategy. SoFi put out a slew of statistics in the annual report about brand awareness, how many households, and how that increased brand visibility. I'll be honest though, branding is something that I'm consistently weak on when evaluating a company. I'm an extremely logical thinker, and I don't think I really understand the emotional aspects of branding, so I'm going to skip over that part of the presentation here. These brand building strategies, though, coupled with referral and cross-buy campaigns, such as Refer the App, which, by the way, there's a link in the description of this video. You can get freebies like $25 in free stock for opening up an investment account, or a free $100 for setting up direct deposit through the SoFi Money account link in the description. The SoFi Money Referral Program, the SoFi Money Personal Loan Bundle, and SoFi's Unique Rewards Program drove record new member and product acquisition. SoFi added roughly 523,000 new members in the fourth quarter. That is a record in terms of absolute numbers, and up 39% from approximately 377,000 members the quarter before, to finish 2021 at 3.5 million, up 1.6 million or 87% since 2020. That is 87% growth in new customers since 2020. Total products added in the fourth quarter were approximately 906,000. That was 51% higher than the approximately 600,000 added in the third quarter, and up 105% year over year, for SoFi's sixth consecutive quarter of triple-digit growth. And really, folks, this is the most impressive statistic for me. It indicates that most folks have more than one SoFi product, and the more SoFi products a member has, the stickier that relationship is. Product cross sales like this have long been the holy grail of the financial services industry, and I'm talking about decades. These cross-selling opportunities are what financial services companies dream of. Total products of nearly 5.2 million at year end were more than double 2.5 million at year end of 2020, with product growth exceeding member growth in terms of absolute numbers. Members are demonstrating high product satisfaction with greater willingness to adopt additional products, further reinforcing the value of SoFi's unique flywheel-like type strategy. Look at the bar graph here, folks. Lending operations, while still providing the bulk of revenues for SoFi, are growing, but they are not growing as quickly as financial service products or technology platform accounts. And this is one of the reasons I find the reaction to the latest news about student loans to be so baffling. As long as federal student loans aren't forgiven altogether, which there does not seem to be a political will to make that happen, on a long-term basis, the extended moratorium shouldn't really factor much into the valuation equation. But let's say that does happen. All federal student loans are forgiven. The impact of that on future revenues is actually a lot less than it was a year ago. It's literally the difference between 1.57 billion in anticipated 2022 revenues versus 1.47 billion. And that impact is going to shrink in the future as other loan operations grow and as financial services and technology revenue make up a larger and larger slice of the revenue pie. Man, I love pie. The student loan refinancing business will ultimately return, though, and the consensus analyst estimate for 2023 revenue of 2.2 billion should still be considered valid to evaluate the stock. And with interest rates rising, there may actually be a rush to refinance once the moratorium is finally lifted. Despite all of the challenges with student loan operations, lending actually still increased through SoFi, and the increase wasn't small. Fourth quarter lending segment's total origination volume increased by 67% year over year, with record volume in terms of personal loan originations and higher student loan originations more than offsetting the decline in home loan volume. Now, this doesn't make me all that comfortable since I view personal loans as riskier, but record personal loan originations of more than 1.6 billion in the fourth quarter of 2021 were up $1 billion, or 168% year over year, and more than double the fourth quarter of 2019's pre-pandemic total. Full year personal loan originations of more than 5.3 billion were more than double that of 2020. Let's remember also that with the bank charter approval is going to come some significant streamlining of loan operations that's going to result in cost reduction because SoFi is no longer going to have to pay someone to custodian loans. In addition, SoFi provides loan referral fulfillment services to Pagaya, a separate company which is an artificial intelligence-driven network that facilitates credit decisioning. SoFi, through its technology platform, has backdoor access now to a broader audience to drive further growth in terms of personal loans, In the fourth quarter, there was a rush to refinance student loans ahead of the supposed January federal student loan repayment moratorium deadline, which didn't happen, of course, and anticipated interest rate increases in 2022. Student loan originations of nearly 1.5 billion increased 51% sequentially, even with the unexpected late December extension of the federal student loan repayment moratorium. This, I don't think, was actually expected by SoFi Technologies. This suggests, though, that there may be another rush to refinance once the payment moratorium eventually expires. But again, fellow SoFi investors, SoFi may have started out as a lending story, but that certainly isn't the whole story today, not by a long shot. Take a look at this chart buried in the actual year-end report, not the press release. You can easily compare growth in lending products, which looks very linear, to that of financial service products, which looks to me like an exponential curve. SoFi talks a lot about their version of the Amazon flywheel strategy that they call the financial services productivity loop, and the next chart is really the best illustration of how it works to create a diversified and growing revenue stream. Look at the center of the graph. By the way, I never met a graph I didn't like. This graph illustrates the ratio of financial services to lending products. When I made my first video on SoFi, well before they went public, sometime in early 2020, student loan operations accounted for roughly 84% of revenues and something like 70% of all products. Look at how the ratio of financial services to lending products is growing over the last 3 years. SoFi is a growth story. They are executing on the financial services productivity loop. They are basically doing everything that they told us that they were going to do, even in a very challenging business environment where things keep happening that they don't have any control over, and they faced this for the last couple of years. SoFi continues to build out their financial services products to move beyond just being a lender. This company now has checking and savings accounts, along with cryptocurrency trading and dozens of other financial services and business services as well, driving the financial services revenue segment, which grew by 442% year over year in the fourth quarter of 2021. So folks, let me bottom line this for you. Do I think that SoFi is undervalued? Hell yes, I do. You are practically stealing shares at any price under $15 at this point. I am slowly personally buying more shares whenever I have the cash, and I've sold put options at price points that I think are just ludicrously cheap. The market cap now is down to roughly $6.5 billion, providing a rare opportunity to own a real growth stock with demonstrated sequential growth in a very challenging business climate at less than 3 times sales targets with revenue growth approaching 50%. This stock now is going to be risky to own in the short term, and there are no guarantees in life, and especially not the stock market. So I do anticipate that there's going to be plenty of more volatility here in the near future. But the longer your time horizon is for holding this stock, the more likely it is that you're going to realize that this stock simply isn't priced correctly by the market for a company that's generating 45% revenue growth. Now, this is just my opinion. You have to do all of your own research, of course, and make your own decision as to whether to buy, sell, or hold this security. But folks, this is my opinion. I think that this is a steal. Anyway, let me know what you think in the comments below. I look forward to hearing from you.